right, thank you guys for coming to the panel. So the topic for this panel is getting to yes in a regulated industry. I'm excited to have a chance to talk about this with our panelists because I think it's something that any deal group faces, whether you're an issuer or a platform. It's number one, how do you acquire investors? Two, how do I build great relationships with them? And three, how do I approach this and still stay compliant with securities regulations? So I think with the diverse panel we have here, we'll be able to really dive into some of these issues. To kick it off, I will have everyone introduce themselves. So starting with Dan.
All right, my name is Dan Drew. I'm the CEO of First Real Fund. We're a commercial real estate crowdfunding platform. A brief bio, I was at GE Capital helping them syndicate franchise hotel loans. Prior to that, I was at Cantor Fitzgerald trading non-performing loans, which some people think is cool, but it actually was very exciting at the time because there was a lot of distress debt in the market. I'll leave it at that.
Hi, my name is Christina Wallander. I'm head of marketing at Realty Shares, a platform for commercial real estate investing. We're trying to make it easier for investors to directly invest in commercial real estate and also manage their investments throughout their entire life cycle. So I spent most of my career focused on growing and scaling marketplace businesses. A journey started at Amazon. I spent some time at Ticketfly in the live event space. Now I'm at Realty Shares, which is also a marketplace. We call it a curated marketplace. And I'm really excited for what's next and to be partnering with NorthCap.
Hello, everybody. My name is Mike Weaver. I'm the Director of Private Funds here at North Capital. A little bit about me. I work on both sides of our business, both the RIA and the broker-dealer side of the business. My background is kind of purely finance. Had a little experience in M&A at Goldman. Did structuring and origination of derivatives at Bank of America Securities. Did interest rate trading at Bank of America Securities, as well as interest rate trading at MKP Capital Management. Joined North Capital in 2015 and very excited about the market that is growing and that we are a part of.
Hello, everyone. My name is Jessica Taylor Shores, and I'm the EVP at Impact Communications. We are a PR firm that specializes in serving financial services firms and their technologies and their allied, really, their partners. For the past 15 years, I have done nothing but PR and media relations in a variety of industries. For the last 10, I've been in financial services. Some of the names I've been with are TD Ameritrade, Mutual of Omaha, and their bank subsidiary. Prior to that, I worked in politics, Iowa politics. If anyone knows how crazy the caucuses are in Iowa, I was on a team that led the 2008 Iowa caucuses for all 1,200 members of the media that done on that nice little town called Des Moines, Iowa. And I started my career in sports. So I have a wide variety of public relations experience.
I'm Sarah Borzan. I'm the Director of Business Development at North Capital. I'm also a principal with the firm, so I help manage our partnerships business, onboarding any new clients, and then also kind of running the technology to ensure that we're developing tech that stays scalable with our partners. So maybe just to jump right in, I think one of the first steps in getting started, whether you're starting a platform or coming into an existing one or a deal group in either generally soliciting or outreaching to an existing investor base, is developing a sound marketing plan. So Christina, maybe just starting with you, can you give a few key items that you take into consideration when developing a marketing strategy really geared towards investors?
Yeah, sure. Well, so your marketing strategy really at any company is meant to support your company strategy. So the first place that I focus and really emphasize with my team is a deep grounding in an understanding of the company strategy inside and out. And by that I mean everything from the mission, vision, and values all the way through to how the company creates a sustainable and defensible competitive advantage. So, mission and vision, we have a lot of conversations about that. And I think some people think, oh, those are, kind of like nice little, phrases that should be up on the wall or maybe in some document somewhere. But they really are foundational and grounding. And we spend a lot of time centering in on our mission. So your mission is why you exist. Your vision is what the world looks like when you're successful. And everything that you do should be laddering up to that. So, so it starts with a grounding in the company strategy and an understanding of the competitive advantage. But then when it gets down to marketing, okay, so how does marketing support that? Really, it's a matter of delivering that unique value to the customer. And a lot of companies, you know, I think it's like, you know, an often question, okay, who do you serve? Who's your customer? And, you know, there's always, you know, sort of a nice, quick and easy answer to that, but a true and deep understanding of your customer, the segments, the personas, what matters to them, that's the foundation of any marketing strategy and being able to truly serve that audience. So it's kind of, you think about starting at the top with what your company is focused on, and then also who you're serving and what they need.
Great. And now, Dan, you, with your experience in the space, you've decided to start your own company and platform. And tell me a little bit how that's been like in approaching growing your investor base and getting the message out there about who you are and who your firm is.
So my primary background was in commercial real estate. So underwriting these deals and understanding the product, which I think is very consistent with what you mentioned, understanding the mission of the company is a key part of any marketing strategy. The most of my time that we focused on so far is not only marketing the brand of the platform, but marketing specific offerings. And that's kind of the crux of this. And I think that one of the challenges of these offerings is that we are attempting to convey a lot of very complex information to a universe of really smart people. And I think that sometimes people that aren't active in the space assume that the crowd maybe isn't aware of all of the risks and some of the nuances in each of these offerings. In fact, they are. So it is a challenge, I think, sometimes to take really complex issues, narrow it down into an online presence, and have somebody actually get interested and make a click and ultimately make an investment. So what have we done? I make jokes about how we found investors. We're literally, like probably everybody up here, have learned to identify potential clients on both sides of the real estate crowdfunding world. That includes sponsors and borrowers as well as investors. The crux of our time identifying investors, we obviously have pursued online options. So some of them are very effective. None of them is a magic bullet. We obviously have pursued PR options. The PR is very interesting because you don't see the immediate response, but some of the articles are incredibly sticky. Combined, you ultimately get somewhere. At the end of the day, understanding the company's mission, acknowledging what you're doing on each of these avenues, whether it's PR or marketing, you still need to be on the phone and developing a relationship with these people. So sometimes that's not necessarily on the phone. Not everyone wants to be on the phone. Sometimes it's online. So it's a relatively long-winded answer, but what have we done since we started? We've done our very best to figure everything out that we possibly can to bring investors online. It's a sophisticated market, and there's no magic bullet. So all of the above. Last thing I'll mention, and I think you touched on this initially, the universe of investors varies. So there's a type that doesn't want to hear 10 or 15 minutes and only wants to spend 2 minutes to make a decision, and then there's a type that wants to spend 2 days. So developing a marketing strategy for that broad of an audience is very difficult. So some target the more sophisticated, detail-oriented folks, some target the less sophisticated, which just adds one more layer of complexity to the whole thing.
And so you mentioned offering specific, and we hear from a lot of our partners only brand specific marketing. So I want to actually get back to that in a second, because I think that is kind of an interesting discussion about maybe what you've seen being more effective and taking a more holistic approach. But you mentioned PR, so that seems like a great segue, because I think a lot of people and a lot of clients think of PR as I put out an article and then I have everyone call or, you know, and it's like an instant return. And so, Jessica, maybe if you could describe maybe the difference between PR and marketing and how that fits into someone's strategy.
Sure. You know, I think it all goes back to your company goals. But to me, the biggest difference, if you had to simplify it, is paying for customers to get eyes on your company or earning that, right? PR, we spend a lot of time working on relationships and telling the company story, whether that's about the brand, customer experiences. It could be a variety of different things. So we work really hard to foster great relationships with reporters over time. And marketing, to me, seems more directed at the customer and the client experience.
So, Mike, going back to that offering versus platform or brand marketing, I know that makes a big difference in terms of the regulatory piece and how we look at that. So maybe just for the benefit of the audience, can you give kind of a brief outline into the FINRA guidelines and what we're looking for, what anyone in the regulated space should be kind of keeping in mind as they do advertising and outbound marketing.
Well, now we get to the fun stuff, because regulations is what we all live for. But no, seriously, a lot of it depends on whether it's offering material or marketing. So like deal documents, things that are part of the deal, that's regulated by the SEC. Anything that's kind of communications with the public, so you want to sell your deal, you want to talk about it and tell everybody about it, that's FINRA. And there's a specific rule, FINRA Rule 2210, that is really the guidepost for the regulators in how they look at any kind of marketing that's coming out of any entities that's associated with a broker-dealer. Without going into the details, because I don't want to put everybody to sleep, the main issue is kind of the content standards. And the content standards are, without reading them one by one, it's being fair and balanced. And if you're going to talk about the great things about your offering, you also have to balance that with some of the risks. You can't exaggerate. You have to disclose the member firm that you're working with. So these are all things that seem simple, but it's really the nuances that really gets to the heart of what we bring to our partners and what we try to protect ourselves and our partners from. And it's kind of a fluid dialogue, because it's kind of like the Constitution or the way that our lawmakers look at laws, and you have the Supreme Court. Like, there's this one document, there's all these corner cases that come up, and you have to make a decision. And obviously there are going to be discussions, and obviously we're going to go back and forth. We'll talk to the regulators, but at the end of the day, it's that FINRA Rule 2210. There's other regulatory notices that are specific to certain segments. So, you have a regulatory notice that's specific to real estate. You have a regulatory notice that's specific to social media. And it's just keeping track of all these different notices and all the regulatory guidance that comes out to make sure our partners are in, the best position to market their deals and to keep, all of us, out of the crosshairs of the regulators.
So with that being said, and I want to open this question for everyone, is what are some of the challenges you have personally faced when trying to develop marketing content or collateral in working in a regulated industry? And I will say, be nice to us. Be nice to us.
I can start. I think a lot of people think that PR is marketing, where you can really talk about the benefits of, and exaggerate a little bit, I guess. PR is really about storytelling of your brand, and it's just a very different way than it is than marketing. Reporters have a BS monitor that is it's so sensitive that they can smell it a mile away. And I guess some of the biggest challenges we face in my job is to have clients understand that, if we're talking to reporters, we're not going to say you're the biggest and best unless you can actually prove it. And it's something that people, when they hire, especially startups and smaller companies that have typically worked in a regulated industry, they don't understand that they can't make those claims, or they can't really, I guess, prophesize about who they are and what they've done.
Well, we've spent a lot of time talking about these topics. So for context, all of the marketing materials created by my team go to NorthCap's ad approval. Mike is a frequent responder to our approval requests. So we've had a lot of conversations. I mean, I guess I'll start by saying, so this is, Realty Shares, this is the first marketing role I've had in an industry that is this regulated. So it was definitely an adjustment. But one thing I'll say is that the standards that are established by the regulators are the right standards. We would want to uphold ourselves to the standards that you described, fair and balanced, educate both on the potential risks as well as the potential rewards. Those are the right things, and NorthCap has served as an extra set of eyes on our content. They've caught things we've missed, honestly caught things not even related to regulations, but that we've missed, and it just improved the overall quality of our marketing materials. So that's been really helpful. I think the thing that I found challenging is that there is a lot of gray area around some of these rules and these additional, sort of decrees that come down, and a few of them. So when it's a gray area, you can take a more conservative or a more liberal interpretation. When the interpretation is more conservative, at times it feels like it can constrain the very traditional kind of basic marketing tactics that you would want for your brand. So I'll give an example. So for social media marketing, for instance, I mean, it's the social in social media means that you're engaging with others, and it's meant to be a conversation, not a one-way stream. So there are other influencers out there in the space we would like to be speaking to, and we hope that they'll be speaking back to Realty Shares. So in the process of that, we would like to @mention them. But if we @mention them, then we are directing essentially our audience to their social media profiles, and now we take some level of responsibility for their content and whether their content upholds the standards that we all believe are the right ones. But that's a lot to take on, and so we're still navigating that and trying to figure out. I mean, of course, you pick the right influencers, this is less of an issue, but still, I mean, people say things that are not fair and balanced all the time, especially on social media. And so there's that. In the PR world, some of our best coverage didn't include the right disclosures, disclaimers, whatever, and so we were constrained in how we could promote that. And I mean, these are aspects of our storytelling, and it's very standard for a marketing team to want to tell the world when their story is being told through. So it's better to have someone else reaffirm the value that you're creating. There's a legitimacy that's created by that versus having us say the same thing. So I have felt like, especially when it comes to engaging with other audiences, journalists, other influencers on social media, I have felt constrained.
Getting to yes in a regulated environment. By far, the biggest challenge is North Capitol. That's intended as a joke entirely. When I initially heard the sound of the panel, I thought the perception is that maybe we would address how difficult it is to be forced to talk to investors using only certain language. But the reality is that the real work is done, as you mentioned, upfront. When you're creating written materials, we submit it to North Capitol. You guys are incredibly responsive. And it's best for all players involved that there is somebody monitoring this. There's just no question about it. As this market evolves, you guys are providing the necessary oversight to make sure that we maintain credibility. So it's a vital function. It does take time, and time is money. So upfront, it's a challenge. As our teams continue to get better at this, it's certainly true for us, the institutional knowledge becomes part of the day-to-day. You cannot use this word. Always insert this word. This is the standard disclaimer. So it becomes more efficient. So I think the main takeaway, and when you are speaking with investors, it's always worth reminding what might be perceived as a negative. This is a positive. It's to your benefit that FINRA and the SEC are monitoring everything that's going on. So that's a frequent part of any conversation I have with an investor that asks questions. Are you going to go on vacation with this money that I give you? I couldn't if I wanted to, right? But I can state North Capital's involved and have credibility with that statement.
Mike, I want to ask you, based on what Christina said, it can be subjective, the advertising approval and how to interpret the guidelines, like you said. So what are maybe situations that could be considered gray area? And then are there resources to groups, to North Capital, to different platform partners that they can utilize within the regulatory bodies, or what have you seen?
Yeah, I would say Christina brought up a great point about a gray area. It's the use of social media and the way that people do commerce today and communicate. I don't want to say the regulators haven't caught up, but there are these instances where the guidance isn't clear. And, to Christina's point, we have this situation where, they wanted to kind of engage, on social media and create kind of a dialogue with potential, influencers, potential, people that they want to attract to the platform. And, we tend to kind of gear a little conservative. I'll be the first to say it. But, I also think that some of the points that they make are valid. I mean, we're not operating in 1970s capital markets. It's 2018. The world has changed drastically since a lot of these rules and regulations were made. And it's no knock on the regulators. They have a very hard job. They are charged with doing, creating good for society by regulating our markets. But that being said, it can be a little bit of a slow process for them to kind of get up to speed on some of the advances that some of our clients who are very cutting edge are trying to get to. So, there's definitely gray areas like that exist. And like I said before, not everything is spelled out. So a lot of times it becomes a judgment call. The one thing we try to do is to kind of take our partner's side, and if we feel that they're making a good argument as to why something should be allowed and why it's not specifically prohibited, either we get comfortable based on that argument or based off of precedent that we've seen, or we're also happy to go directly to the source, the regulators. So I think whenever you go to the regulators, you ask them a question, they're going to give you an answer. So there's pros and cons to that approach, and we try not to go directly to the regulators unless we're kind of at a complete impasse where, it could work, but we're not quite sure, but we want just the regulators to opine just to be safe that we're all doing everything correctly. In that situation, you can do kind of an expedited approval with FINRA, which is 3 days for, a higher cost. The regular review is 30 days for a lower cost. And, the pro to that is, let's say we're being a little too conservative and, our partner has a good argument and FINRA looks at that argument and they're like, yeah, we're okay with that. Then you have it from FINRA. That's not saying that because FINRA opined on this one situation that it's carte blanche to use it in every use case. But it gives us comfort that, okay, this approach is okay. Our partners can do this. And, we don't, at the end of the day, we don't want to be the group that's stopping our partners from doing business, because the more business our partners do, the more business we do, the more success they have, the more success we have. So that's the good side. So if FINRA opines and says it's good, we're good to go, and we can put it to bed. The flip side is if FINRA definitively opines on a strategy and they say you cannot do it, then we can't do it at all. And so, we try to weigh those arguments, and there are certain things that FINRA absolutely has us opine on. There are certain things that, we'll have our regulatory exams and they'll say, we need to see this, we're not comfortable with this, and we have to reply. But for other things, we try to get to an outcome where both parties are happy without going to the regulators. But the regulators is always kind of the last option, and we're always happy to facilitate that conversation.
Right. Yeah, and I would add that they welcome the conversation as well, but it's exactly what you said, kind of be careful what you wish for. Exactly. So Jessica, I'm sorry to catch you.
No, that's okay.
So I wanted to bring up with PR, we just had a conversation yesterday in discussing a release and reevaluating the regulatory aspect and some of the risks you run in making announcements as a firm. Can you maybe give some examples of what you've seen recently, especially in the token space, and kind of how this market is booming with a lot of news and maybe not as much substance?
Yeah, so I would say one of the hardest things that I've had, and Sarah kind of said the same thing earlier, but discussing the validity of your offer and backing that up. We were joking about some of the PR faux pas that we've seen. Probably most recently, most visibly, was the Coinbase, how they had to back it up real quick that they were SEC approved. I mean, there's so many examples of bad PR right now. I think DJ Khaled was sued for a token or something. I mean, the list goes on. And my advice to anyone is really, compliance can be your best friend or they can be your nightmare. So it's important to have partners like North Capital that have your back and can be a second pair of eyes, because even in a PR world where compliance, we work in a bit of a gray area of compliance, I would say. We don't need approval for everything that we do. However, we do need approval for public statements, such as press releases. We need public approval for Twitter and every social media that you would think, but we don't need permission to go talk to a reporter about, hey, watch out, this is what's coming up. Or we don't, there's a lot of gray area in PR. So I would just say to anyone that is thinking about engaging with PR, understand your risks, and definitely learn from those lessons that, talking too much can be a very bad thing. Mm-hmm.
Yeah, and I think also, like you're saying, where it is a gray area in PR, kind of touches back, Christina, to what you were saying, where you get mentions or when you have something quoted in the press. It's like, how do you utilize that in a way that benefits your firm? And sometimes if it doesn't, if someone's just, if a reporter is not going through you, it's not a PR, a press release that you're issuing, but rather just press you're getting because of all the things you're doing right in this space, can be difficult to be able to kind of capitalize on some of the mentions, that you receive. Kind of in a similar vein is, I know specifically in real estate, there's a lot of groups that have elected to really, I guess, press their luck and not go with a regulated partner, not go through a broker-dealer, do some really fancy structuring, and therefore, I've heard Bloomberg ads that I'm like, they're not working with a broker-dealer. And how do you compete with that? How do you keep up with, really people who would be competitors when you kind of have to keep everything clean?
Yeah, it's definitely something that that I've spent a fair amount of time thinking about. I mean, I guess I'll start by saying I think it's incumbent on our marketing team to be able to communicate to the marketplace the value of our paradigm, of the approach, the fact that we are working through a broker-dealer, the fact that we make great efforts to adhere to compliance and put the investor first. So that's on us, and we actually are working very hard. We have a couple of interesting things that I'm hoping will help articulate that better. But the reality is that our real competitors aren't other platforms that are operating out there, with, let's say, absent broker-dealer regulations. Our real competitor is investors not participating in real estate at all. So there is a big market out there, and I think it would be easy to get distracted by what other people are doing. I think one of my bigger challenges is honestly managing the objection handling internally, because we're all at RealtyShares, we're all very proud of what we're creating. And when you see other platforms out there talking about these incredibly high IRRs, and it's out there in the marketplace, it's like, hey, why can't we do that? They can do that. Why can't we do that? I saw this ad. Why can't we do that? And so it's really managing the expectations of the team. But I still think that there's a lot that we can do, just to better articulate internally and externally why being regulated by a broker-dealer is helpful.
Okay. Yeah.
It is always a little bit disappointing to see that. At the end of the day, and Jim, the CEO of North Capital, mentioned this morning, this isn't a zero-sum game for us, right? Our primary competitor is not necessarily RealtyShares or another crowdfunding platform. We need people to be participating in this space in general. So all of us together creating and contributing a regulated series of offerings is what we're trying to achieve and what we're doing. And the word that inevitably comes up is reputation. There's a lot of questions that come up in these deals, some of them very nuanced, some of them very detailed. At the end of the day, reputation can seal some of those problems up in a relatively quick manner. And the companies that are doing non-compliant offerings, the reputation isn't sustainable. So.
Do you think that it pollutes the category overall?
It does. How could we fight that? I mean, it's a great question.
That's like the bigger concern. It's like we're creating this nascent category together, and when you have, call it
the non-team player.
Yes, yeah. Exactly right. Yeah, that's right. That's trying to advantage their proposition over essentially what is right in the long term. So it's like the short-term optimization. It's just, I think because you can have essentially like on, like in some of the other marketplaces that aren't curated, that really just connect real estate operators with investors, and they essentially, they kind of, it's on them to connect. So the investor will fund their offering, and it's on the real estate operator to communicate back to the investor the performance of that offering. Over time, essentially, you've got on platforms like that, the real estate operators that are marketing the highest IRRs are the ones that attract the capital. So there's sort of in the platform itself inherently incentivizes real estate operators to promote the most optimistic view of what the returns might look like. And investors that, get excited about that and participate in those offerings and may not realize the returns that they expect may turn away from this type of offering altogether. But again, I think, as I've thought about it, it's really on us to be able to communicate how our paradigm is different and some of the controls that are in place in a platform like Realty Shares that you might not get on another platform. And but that's kind of how we've been thinking about it. But it's definitely, something that's top of mind for us.
And I think the other thing that we haven't talked much about, and being sensitive of time, I want kind of your quick thoughts on. So there's marketing to attract visibility and investors to your site, but what we haven't talked about is getting to yes. So they get on your site. What matters to the investor? Is it ease of use? Is it visibility? So it's a two-part question, hoping for a quick answer. The second part is investor retention. And maybe I'll save that for kind of my last question, so you guys can be thinking is, there's first the conversion, but then also there's really a high cost to acquire an investor. So how do you keep them engaged and active on your site? And that's a part of the strategy we haven't had a chance to talk about. So I'll let whoever wants to dive in.
I mean, I can take it first. I would be curious, to hear what our partners think, because you guys are living it day to day. But from my perspective, I think, I'd preface this by saying every investor is different. Every investor has different pressure points, different things that they're looking at. But when I think about myself as an investor, the biggest thing for me is trust, right? So if I make an investment on a platform, I'm trusting that, those funds are going to go to the strategy that was presented to me. I'm trusting that if there are any returns, they're going to come back to me. And I'm trusting that, I have a resource at the company that, can answer my questions or, will guide me through kind of their process. So from my perspective, I think it's definitely trust. And I think to everybody's point about, non-compliant competitors, I think absolutely it's a challenge because, some people are, kind of captivated by that headline IRR number or what's going on. But at the end of the day, it also loses credibility and it kind of prevents that trust from building. So I think in the short term, maybe it could be successful. But I think what our partners have done is created a solid foundation of trust for the long term so that even though they're not, competing directly with that sort of advertising or that sort of message, they're saying, hey, we've opted into doing the things the right way. And, that business, we may lose that business now, but we're looking at the long-term game in building a successful business. So that would be my view.
I guess I would just add my problem right now, or the biggest thing is education, because the industry is still developing. For when I walk into a reporter or try and pitch the story about North Capitals and their partners, people don't know what it is. They think it's blockchain or it's crypto, it's this, it's that, it's every other thing. And it's lending. It's just, it's a variety of things that I get back to me. And I'm also trying to educate them that there's different layers of legitimacy, and that being a broker dealer or having a broker dealer backed solution is the way to go, because reporters love a juicy, sexy story, and every other day you'll see something in the headline how something went belly up. The ICO Superstore I just saw went belly up or something, and they kind of lump those bad actors in with everyone because they just don't know the difference. So I lean a lot on Sarah and Jim and Stephanie to help me articulate that story. And until that education is there, and it's done definitely through PR and marketing, it's going to be a very turbulent time until there's a kind of that baseline education.
I'll go where do you want to go?
Well, you spoke first. Go ahead.
All right. So to answer your question, marketing for the platform, the most effective thing that we found is things that move. And by things that move, I mean video content, whether that's me talking or whether that's a drone flyover of an asset or a animation of what the platform represents. That gets clicks, that gets people interested. So that works. Now I've lost my train of thought, what the second part was. What keeps investors around? Obviously, good deals keeps investors around. And one of the things that's hard about this is, one of the great things about having an online business is that you have access to so much data. What works, what doesn't. Did people click on the upper right corner? They click on the lower left corner. They click on this picture or that picture. They click on this email subject or that. You don't necessarily have the same level of data analytics that we're used to having. What keeps people around? In my humble opinion, what keeps people around is the little things. It's responding when they have a question. Why didn't this happen? What's going on over here? When's the next distribution? And so if you have the resources and the expertise and patience to respond to that, that's a really amazing way to keep investors involved. Really simple, but really important.
Yeah, that makes a lot of sense. Just building, I mean, because ultimately it's delivering on your promise and reinforcing the trust that ultimately is essential. I mean, these are investment platforms. This is people's hard-earned capital. I mean, when you think about what folks really have to accomplish in order to accumulate the kind of wealth that you need to have to be accredited and to invest on these platforms, it's really significant. And to be a steward of that capital is something that you need to take seriously. We certainly take seriously at Realty Shares. I guess one thing I like about real estate investing, and an attribute that's different from some of the other kind of commerce platforms I worked on, is the fact that these are long-term investments. So you asked about sort of retention. I mean, there are many, many touch points that you have with an investor through the life of an investment, which may be 3 to 5 years. So you've got, distributions, payments, asset management updates. There are all of these opportunities to connect again with the investor, check in, do what you said you were going to do. So I actually think that an investment platform like this lends itself, if you're looking for those opportunities to sort of reinforce retention and make your customers happy, there are many.
So last question, and I'm going to say I want one sentence for this from each of you, which is, getting to yes in a regulated industry, it's investor focused. So we've talked about trust, we've talked about marketing being regulated, staying in touch. So in your opinion, what is most important to your investors, or any investor group for that matter?
This is like,
This is like
And it could be
exactly
repetitive.
yeah.
this is exactly the problem. Like when we're putting together like a few bullet points that Mike has to approve, you got to like really sit and think. So that's where I'm left with this question.
I would say that we help them grow and protect their wealth. That's what we're here for.
I'd give a twist, given that we work with a lot of our partners. It's helping our partners succeed.
I've got an answer. We want to, the ultimate goal is to allow investors to take appropriate risk that they're comfortable taking and learn from us and learn from the sponsors.
I guess I concur with you. Help our partners succeed and tell about their successes along the way.
Great. Well, thank you all for your sharing your expertise and your background, and thank you all for participating.
Thank you.
Thank you.
Thanks, Sarah.
Thanks, Sarah.